Synergy FX. I also run the webinars. We are going to get into this week's webinar, which is the week ahead. And what we do in this webinar is pretty much talk about what I foresee is going to happen in the Forex market. We're going to take a look at a bunch of different currency pairs and some potential trading opportunities and trading levels that everyone can take a look at. This session is for you guys, so if you have questions along the way, or if there's any particular currency pair or trading setup that you want to take a look at, by all means, fire away, ask any questions that you want. The only thing that I do ask is to try to keep on topic. So if it's about a currency pair we're talking about, by all means ask the question. If not, just save it until there's a little bit of a break and you can go ahead and fire away. We already have a question coming in. Martin, I do see the question that you have, and I will get into it in just 1 second. Okay, so before we do get started, just a little legal disclaimer as always. Trading Forex carries a high level of risk. You could lose some or all of your investment. The information that you're going to receive in this webinar is for educational purposes only and should not be construed as trading advice or counsel. If you do have any questions regarding Forex trading, please feel free to seek outside assistance from a financial advisor in regards to those questions. Once again, I can't stress enough that this is for educational purposes only. If you hear some good ideas, please feel free to act on that stuff, but just do so with caution or trade it in a demo account. We did get an indicator question right off the bat, because as you can see on my screen, this blobbish type indicator is what's known as an Ichimoku cloud indicator, and the question that was asked is does this predict the future? It is one of the few forward-looking indicators, meaning that the price data is here and there's still some indicator out in front, as opposed to like a moving average or an RSI, which is what's known as a lagging indicator, meaning that the new part of the data doesn't print or doesn't adjust until the candle closes. And I wouldn't say it's a predictor of the future. The way that I use this indicator is a way to predict support and resistance, and a way to predict potential breakout areas. So that's kind of how I use it. I don't think anything can predict the future, because if it could and people knew about it, then there'd be no reason to attend webinars and no reason to trade in the first place. Okay, on the chart you have your two moving averages, which is 100 and 200 period moving averages, and the Ichimoku cloud. Those are the two primary indicators that I use, in addition to Fibonacci or generic support and resistance. So what we're going to look at first is the euro dollar. Euro dollar pretty much has been headline-based panic trading that we've been getting. It's been a lot of ping-ponging back and forth depending on which headlines come out. People, as it was getting beat down to 26 and change, people were looking for any reason to prop it back up so that they could just get in and sell at a better rate. And now that it looks like the deal, the euro deal is going to go through and Greece is going to be saved, you're seeing a lot of europhoria and euro optimism, which is pushing this back up to closer to 33. Now, but if you look kind of along the way, there's just so much chop in here. There's not a smooth move. There's just so much chop through the market, and so much just movement from hour to hour. And it's been very, I wouldn't necessarily say dangerous is the right word, but it's just been very difficult to pick spots to trade the euro. A lot of times your moving averages are good indications of breakout areas and support and resistance, and even that, it's just bleeding over, and you're getting stuff where it just it's not clean. We have a nice little Fibonacci here that's pretty clean. It pulled back to this 23% level on Friday. We had a complete Euro bull day on Friday, and everything turned over, and it was just dollar positive all the way around, including this. So this week we went from 33 and change down to 3160 roughly, and now we're sitting, right back in the middle of this range at 3230. Now, I think this is pretty much going to be your range for this week as far as determining what's going to happen. If everything gets ratified from Greece and they get the deal through and they start to put those plans in place, I think you're going to see more euro strength. I think that's what the market's hoping for. But if they can't come to an agreement and finalize a deal, I think, and there's more talks and real talks of Greece leaving the European Union, then I think the euro is going to nosedive, and we're going to see levels back around 26. So once again, you got to wait and see what happens, and you got to pretty much just react to the headlines. Right now, to try to make a call on where the euro is going to go, I'm biased towards the euro being bullish right now, simply because I think they've come this far with the deal for Greece, and they're going to wind up hammering out the details. But if it lags for a few days and it's unsure and the picture is murky, you could see the market drop a little bit and dip back down to the 3160 level or the 3080 level, before the deal gets done and it gets propped up. So I'm waiting to see what happens with Greece. I'm waiting to see this thing kind of break out of this little range that it's in. If we get over 33 and a quarter and the deal is in place, obviously you're definitely looking at long orders. If we don't get a deal done and we break back down below 32, you could see a couple days of bearish movement until we get a clearer picture of the terms of the Greek bailout. So, the euro is very, very murky right now, and it's not exactly an easy thing to try to make some trade calls on. So I would wait until Europe opens, wait until some information that starts to come out as far as what may happen, and then make your decisions accordingly on that. Does anybody have any questions about the euro or euro dollar specifically? Okay, we'll continue on with the euro and talk about the euro Swiss. With the euro Swiss, we've seen Swiss National Bank put their peg on 120 as a mark, but they're not going to let this currency pair dip below. We got close to that at pretty much 120.25, and then bounced off, and then hit 121.25, which was the kind of market accepted resistance level, and bounced off of that right here, and then we're sitting on sitting at 120.96 right now. We get a breakout above 121.25. I think you could be looking at, and Greece comes to the table and everything gets finished. I think you're definitely looking at long orders above 121.25. If Greece for some reason leaves the European Union and they don't get their act together with that, then and this thing starts to flirt with 120 again, you definitely might want to get a sell stop order in to look at breaks below 120, because a lot of people say if it does break below 120 that it's just going to free fall. So definitely something to consider as far as the Euro-Swiss pair goes, and once again it hinges on what's going on out of Europe and with Greece. Euro yen, pretty much same thing. We've seen euro strength, and this come through, and we hit 103 and change. We're now back down to 102.75. And the yen has weakened. Another conversation about intervention. The BOJ has been talking about intervention and the possibility of getting involved with that. So that would obviously greatly affect this pair. So if you have a Greek deal in play and Japan starts to talk about an intervention on Monday when they have their meeting, you could see a lot of upward movement from the euro yen. And I would look pretty much, anything above 103.50, and you're kind of out of this range. You have a reverse head and shoulders here that kind of, just get rid of one of these indicators. Delete. You have a reverse head and shoulders that formed, and you got, come down here, formed a shoulder, head, shoulder, and then here's your neckline at 102.50. And you have your bottom at roughly 97. So you're looking at 500 pips of possibility. So depending on what happens out of Europe and Japan, this thing could actually hit that. So you got to definitely keep that in mind. And I would be bullish on this currency pair, especially with this pattern in place. Just keep your eyes open depending on what happens with Europe. If you get positive euro news and the yen continues to weaken, that's just nothing but good for the euro yen. So definitely keep your eyes open for that. That's pretty much the euro pairs that I'm going to cover. Any questions about those altogether? Okay, we're going to keep it moving. I'm going to jump into Aussie and New Zealand. We're actually going to, normally I don't look at short-term stuff, like really small time frames, but I want to just jump down to the 1 minute to illustrate something that did happen when we opened today. We had a massive downturn last week on Friday, and this closed down tremendously, and then we gapped up to open. Small here is a much larger gap on the New Zealand. We only have a 10 pip gap or so here. There was like a 40 pip gap on the New Zealand. So definitely something to keep in mind on that. We'll cover that in a second. But Australian dollar has been tremendous. It's been on a tear. Gold's been up until recently, last couple of days, and this has been nothing but soaring. But we're starting to see some dollar strength come back. Some good news coming out of the States. Gold's taking a little bit of a hit. So, we saw this go from 108.61, down to 106.70, pretty much over the course of the day on Friday. Now we're back up to 107.25. So, I want to see, kind of, you've seen this pullback to this 100-period moving average. Let's see if we get a break. If we get a break of the moving average, you could possibly see this start to turn over a little bit and pull back and correct a little bit. I'd like to, before resuming long orders, yes, everything fundamentally is sound with the Aussie. I'd really like to see a pullback and a little bit of a correction. We've gone from 93.50 to 108 inside of a few months, and I mean that's sizable. That's a really sizable move. And I'd like to see, we went actually from October to the end of October. We made most of that, and then we had a tremendous pullback. So, I'd like to see us pull back a little bit here before we resume, some long positions. But, if it continues to break up and gold continues to go up, you can look for long spots. But we will approach all-time highs at the 110.91 or 111 mark. So, once we start to kind of get up this high and with all-time levels, you're in literally uncharted territory. So, hopefully we'll see some correction, some pullback, some profit taking, and then you can find some better spots to make some trading decisions. But if it still continues to keep climbing, you just got to pretty much pay attention to the fundamentals, because if you're in uncharted territory, you got no technicals that you can rely on. If we hit 112, 113, there's really no technicals up there. There's no resistance, there's no support, everything's brand new. So, let's see what happens over the course of this week, and we'll see what kind of picture that the economy is going to paint. If gold's strong and the Aussie economy is strong, it seems to be a good place to put your money. There's no controversy going on right now, like U.S. or Europe, and there's no talks of intervention like you have out of Switzerland and Japan. So, it seems to be a place where people are comfortable right now in putting money. Let's take a quick peek at the New Zealand. This is where you had a little bit bigger of a gap. Let me just get rid of... So this is where we closed Friday down here at 82.61, and we opened, 82.85. So you had a 25 pip gap to open to the upside, and we are back up around 83.15. And we're approaching the 200 and the 100 period moving averages. So we'll see if these act as resistance. If it does break back up through these, I would think that we're going to resume a upward bullish path. But once again, every time it's pulled back to these, and now we finally got a breakthrough, and we're seeing a little bit of dollar strength in the market as well. So these may act as resistance, and we could see them pull back, and then we'll continue to get this thing to head in a downward direction and get some correction. Because once again, just like the Aussie, we went from 73 and change end of November, early December, all the way up to 84, which is over 1,000 pips inside of a couple months. So we'll see. We'll see how this week goes and go from there. You'll notice that the pullback on the 4-hour chart pretty much came back to this 100 period moving average, and we'll see if this thing does break back down to the downside. This is what I'm going to be looking at. 82. 82.42, 82.50. We get a break below that. We have quite a sizable gap between the 100 and 200 period moving average. A lot of room to run. We haven't been below the 100 period moving average since December of 2011. So let's see what happens with these pairs. Any questions about Aussie or New Zealand? Alrighty. Last but not least, actually, we got a couple more groups to cover. We'll cover the pound and we will cover the yen. First, we'll do pound dollar, pound yen. We seem to have, we set up support on the pound dollar, at the 152.75 level, and we've been doing nothing but climbing from there. We hit 159.40 last week, and market pulled back, and we had some other area of support kind of over here through that. This is the daily chart. We'll break it kind of down on a smaller level. This is the pullback once again with the dollar strength that we saw on Friday. And once again, if the dollar strength resumes, this is your resistance and your breakout level here with these two moving average lines, because once again, on the straight up move that we've seen over the last 6 weeks or so, anytime it's pulling back to one of these two moving average lines before it resumes its upward trend, and we've broken through both. So that's what I want to see. I want to see when these things start to pull back up to those levels, whether or not they're just going to pop right back through them, or whether or not we're going to, those are going to act as resistance, and we're going to see dollar strength come into the market. Pound yen. Pound yen pulled back, but not as far. We saw 123.25 last week, and we're at 122.50 right now. This has same type of deal. We set up a bottom, and it's pretty much been riding that, and now we're sitting right here at the 200 period moving average on the daily chart, and that's pretty much what we're going to keep an eye on to the upside. It's 122.85, 123, and we get a close above that 200 period moving average, and that could be your indication that we are off to the races, to the upside again, because we have not been above that since April of 2011, and we're kind of last 3 or 4 days it was at resistance. So that's that's what I'm looking for. And once again, we'll get some spillover from both the euro deal and Japanese yen intervention. If Japan starts hinting at intervention and trying to weaken the yen, and euro comes to the table, gets a deal done, the pound gets some spillover from that and should see some strength, and the yen weakens, that for that pair, that means up on the pound, down on the yen, and that means we could break right through this 200 period moving average and continue the upward move. And possible target would be this 38% retracement level, at least the first target, at 125.65. So we're going to see what happens this week. This week should be a really big trading week with the euro deal and the BOJ meeting that we have coming up. So we've talked pound yen, we've talked euro yen, we'll talk dollar yen right now. And we've seen a lot of strength on the dollar yen recently. The range has been pretty tight, and 75.50 was the marker pretty much that the BOJ was talking about, and that if we hit that they were going to jump back in. As you see, that was pretty much where it was back in October. When we had the intervention, we got as low as 76, pretty much even, and then we saw with dollar strength and Japanese yen weakness, we're at 77.60 right now, so it has pulled off that level. But once again, we want to see what the BOJ has to say this week, and we'll see if the dollar strength continues. I mean, 76 to 77.50, it's 150 pips. Normally, for a currency pair that's not like earth-shattering, but I don't think that the dollar yen has moved 150 pips in the last, 4 months, 4 or 5 months. It hasn't moved that much in that short of a time frame in months. So 2012, dollar yen and the yen pairs in general definitely starting to see a little bit of pickup in volatility, and they could become a currency pair that you can start to look at to trade again. So that kind of covers what we're looking at. We'll take a quick look at gold. We hit almost 1770 last week. And resistance that we're looking at here is pretty much 1765, and if we get above that, 1800 should be the next target, and then above that, we're looking at all-time highs. So let's see what happens with gold. We're at 1727 again. 1695 is the downward support target for that. And we'll see where the money flows this week. Are we going into Europe and out of gold? Are we going into the dollar and gold and out of Europe? So is it going to be a safe haven week? Where the Swiss and gold sees a boost and money flows out of the euro and out of the dollar? We don't know. So we want to wait until Europe kind of comes into the session and get an indication of where the market's going to go. That's pretty much all I got. I'm going to open the floor up to any questions that anybody may have in regards to what we're talking about and anything Forex related. Martin, which currency pair are you talking about? The question was, why do we not think we are still in a downtrend on gold? Simply because, we kind of built a bottom. We're on a daily chart here, and, it's not a matter of being in a downtrend. This was, at this time period of, we fell out. We went from 1900 to 1500 in a course of less than a month, and we built another bottom here end of last year, early this year, and we are on our way back. So we have this bottom that's built here, a little bit of a double bottom, and if we're on a longer time frame, I'm looking here. This is kind of where I'm looking right now. And we're in and around this area in the middle of the trend. So we're kind of neutral right now, but gold has been strong. If you look, we went from 1520 roughly to 1765 inside of 4 weeks. That's a strong push. So for what I'm looking at, I think that we're in an uptrend, and we're in the haven type of trading status until Europe solidifies its position. People are still looking at gold as a safe haven, and as long as they're still looking at gold as a safe haven, I'm looking at it as a strong commodity. Any other questions? Forex in general, trading in general, the markets, by all means, throw them out there. I'm happy to talk about whatever you guys want to talk about. All right, if there are no other questions, if you want to talk to me about trading, send me an email, Jeff, Jeff, at synergyfx.com.au. Another question says, are the flat lines support and resistance, or the whole cloud support and resistance? The horizontal lines that are on this chart itself are just support and resistance lines that I've drawn in myself. The cloud is just the edge lines, act as your support and resistance breakout areas. Gold is a little tough with these charts because there's not a whole lot of data. You look at some of the other ones, and these act as your breakout areas. The horizontal of the cloud. No, just the edge of the cloud is what acts as your breakout area. Not, it doesn't have to be horizontal. It's just the edge. If you want, Martin, send me an email, jeff@synergyfx.com.au. I'll send you a lot of information you can read on Ichimoku. I have some good websites, free information that you can take a look and get a more detailed explanation. All right. That does it for today's session. We do webinars 3 times a week, so keep an eye out on your email. We inform everybody of what's going on via email, and look forward to seeing you again. Enjoy your day. Good luck with your trading.